What's going on, ladies and gentlemen? Camilo here from Trending Waves. I hope you are all welcome back to the channel. So it's been a pretty bloody last couple of days in the markets, right? And so the question that is on everyone's mind, and is, you know, price action is not helping, but try to confirm this, is that are we at the top in the markets? Okay, are we rolling over? And so in this video, we're going to discuss that. We're going to see if we can try to determine and figure out if in fact the possibilities of a market top are here. And we're going to do that by using a preferred method of technical analysis, which is Elliott Wave theory. Okay, so we're also going to do one thing here. I'm going to show you guys, okay, I'm going to show you guys the most bullish count that I have, which I haven't put up in the channel yet because I just don't feel that that is appropriate at the moment. I know I'll get a lot of backlash here, but there is evidence that we aren't at the top yet. All right, and so let's get right into it. Before we do, subscribe to the channel, give me a thumbs up on this video, and don't forget to hit that bell icon so you'll be notified when I upload the video. The cues here on our preferred interpretation is still suggesting that we are stuck within the wave 4 pullback of the primary degree, which is this yellow bubble over here. Okay, that is the higher time frame degree wave count. So on our daily time frame, we're going to look at from the COVID lows towards our recent lows here, or November 22nd. So we got our first 5 waves up to complete our wave 1. We then have a 3-wave pullback into the wave 2. So all of this is good still, right? We got 1, 2, 3, 4, 1, 2, 3, 4, and then 5 to complete the 5th of the 3rd. Okay, let's zoom into price action here from November the 22nd, because that is when we completed our 3rd wave of the primary degree. So taking you down to the 30-minute time frame, let's reset the chart and let's focus on price action from November the 22nd, which is when we made our last high. So after that day, we then started selling off the following few weeks, and we got our first W wave. Okay, 3-wave pullback into the X wave, which is at the 78.6% retracement, or forward to 11. Okay, we then since started selling off heavily. At one point, we thought that this was already the bottom, okay, and that the correction was already complete. Wave 4 was here, but I made note of it in a couple of videos here and told you guys that I don't think that the wave 4 was here, or might have been of the lesser degree, but of the higher degree wave count, it wouldn't be, because we haven't reached our normal targets for that particular wave structure. Okay, so if I go back to the daily time frame, that particular wave structure is here in yellow, right? The 23.6 and 38.2. For about 2 weeks now, I think, right, I've been making note of this whole range. Okay, that range is the area where I feel that might be a possibility for a bounce play. Okay, now taking you guys back down to the 30-minute time frame, and let's take a quick look at what's going on now. So when we completed our first A wave, or the wave 1 back then, right, we got a rally up to the wave B. We thought that this would have been the initial, let me zoom in here, the start of an impulsive structure. Okay, we got the pullback. We were looking for a 3-wave pullback, but the freaking chart kept on pulling lower, and thus not allowing us to give that confirmation that this would have been all she wrote. However, we made our first wave 1, ABC pullback to the wave 2 of the minute degree, and then we got lower. We kept them trending lower, and then I think there was a day before yesterday, right? Yeah, yesterday or the day before yesterday, where we got this gap up, and we started thinking that perhaps this was the low. Why was that? Because we were reaching already the 23.6% retracement of the higher degree time frame, right? Of this yellow count here. Okay, excuse the background noise there. So anyway, we made note that if we start breaking above this low, then this whole wave structure is validated, and in fact the wave 5 or wave C or wave Y has completed, and this is it. However, the market respected that Elliott Wave guideline, and we does never broke the low of the wave 1 overlapping into the wave 4. All right, so with that being said, we started selling off heavily, and now we find ourselves in a pickle here. All right, because that is still likely the case to be that we are now trending lower. Now, is this all she wrote? Are we now trying to turn around? And the answer is we may or may not, right? We're still stuck in this range. We're still trying to see if in fact this is the case. Okay, we have broken several fib levels, right? We've broken below the 23.6. We've broken below the 1618, which is the extension of wave W versus wave X. So our last level of resort are these two zones, all right? And here we go. So our last level of resort to find support is the previous wave 4 pivot point, which comes in at 350.26. If that fails, then the next level to watch is 38.2%, which is 344.26. Now, the markets can continue on lower. This might have been all she wrote. Then we see the gap, the reversal point. But we got to keep waiting. We got to keep that on watch because the SPY is still lagging behind. Okay? Now, let's take a quick look at the SPY before we dive into our scratch count and show you guys why we may not be at the top just yet. Okay? So over to the SPY. The SPY also back up to the daily time frame. Let's quickly digest this thing. So COVID lows 1 2 1 2 3 4 5 of 3. We're still on the ABC pullback. Now, this chart here is a bit tricky at the moment. I mean not tricky, rather more of a little bit more clear, right? Because when we made our B wave high here on January the 4th, which was a 1272 retracement of wave A, okay, then we started selling off 1 2 1 2 3. Now this wave 2 came at the 23.6% retracement. I remember telling you guys that this was an area of high interest for me to take a short position, but I wanted to see at the very least a 38.2% be tested. We didn't get that. The market did not give us that opportunity, so it ended up leaving behind us. Now, we've already reached a 100% extension of wave 1. So wave 3 is now equal to wave 1. Remember this, right? Remember what I'm saying right now, right? Wave 3 is equal to wave 1 because that is one of the Elliott guidelines. But there is an alternative to that guideline, which I'm going to review and give you, and that'll determine the most bullish count, okay? So, all right, so if we bounce here, if we go up further, then keep in mind that we cannot overlap into wave 1. All right, so that'll be our zone of possibilities where we may take a short position. All right, if we keep on trending up, we got to see a 3-wave pullback to retrace this entire advance. Okay, then as long as we get the closer we get to this area to 451.32 on the SPY, the better it is for us to take a short position because that'll be our level of risk. Right, we will hold 451 as our stop, either at or above it, north of it, and then we take the short position, right? So until then, we gotta wait a little longer. Now, once that completes, we will find out where this 5th wave of third is going to complete. Then we get our wave 4 relief rally, and then we get our final fifth of C of wave 4. At which point we will complete. Now you see what I'm saying, right? The SPY still has a little bit more left to go, unless this is wave 3. All right, let me hide this for a second. Unless this is wave 3, we're now in the makings of wave 4 next week, and then wave 5 of C of 4 is at play. Okay, that is the only likely scenario that I see, because we also have to keep in mind one thing. We still got big tech earnings. I know Netflix did not contribute to what happened to the market. I mean, contributed to what happened to the markets. But we have the Fed next week. We have other big tech earnings, heavy hitters in the markets. And that could be a pivot point, right? That could be the reversal that we're looking for. Otherwise, yeah, it's going to look ugly and we may keep on dipping. All right, guys. So let's get ready for the backlash that I'm about to get, all right? So let's go over to the cues on this chart over here. And let's zoom out. All right, so how do we determine this? How do we structure this here? So let me hide this for now, and let's quickly review. I started working on this count. Actually, before we do that, let me show you guys why we, starting from March the 19th, March the 20th, March 2020, why this is still not yet a completed 5th wave or 5-wave structure. All right. So let's hide these, right? Let's hide these for now, or shut them, or delete them rather. All right, let's do a quick count. All right, and I'm going to let you guys know. So without considering any of the degrees, right, we can establish that this is the start of the new uptrend, all right, of a new cycle, because All right, zooming now to the weekly time frame, I'm considering this as the COVID, as the from the credit crisis. All right, this wave structure here. So 1, 2, 3, ABC pull back into the wave 4, and now we're looking to the fifth wave. All right, now in order to complete the fifth wave or an impulsive structure, we must see 5 subdivisions. Okay, clear subdivisions. So let's try to find if between the COVID lows to today we can subdivide into 5 waves that meet the guidelines of Elliott Wave theory. Okay, so let's go down to the 1 hour time frame. Let's do this right now. So actually the daily is easier. Okay, so starting off from March lows, right? If we've always been considering this as our top of the wave 1 and then the wave 2 pullback. However, we have this little structure here, okay, that is another pivot, and there's a correction. So what if that was 1 down and 2? Okay, what if this was 3, 4, and 5? All right, that could be the case, but there's something critically wrong with this count. And what is that critical thing? That there is a degree violation here. Okay, how can a higher degree wave count be smaller than its smallest degree wave count? What do I mean by that? I mean this, right? So after we subdivide it into 1 and 2, because we could dissect five substructures here, right? And this is clearly ABC, right? We could do 5 waves here, ABC down, and then another structure here. Now let's zoom in here real quick. So this is the thing, right, guys? So if this is the case, 1, right, 1, 2, 3, 4, and 5, ABC to the wave 2, how in the world? Okay, so that's what I was gonna say. So then the smallest degree after that to subdivide into the third wave, so we got to find 5 waves here, would be 1, maybe 2, right, 3, 4, and 5. Okay, I'm just for argument's sake, all right, and we'll call that the intermediate degree. All right, so how would this be? How is it that the higher degree in its magnitude, or this in its decline, in this correction, is smaller than its counterpart, or it's smaller than in less percentage than the next lesser degree? We have a 7.38% retracement from the high to the lows of this correction, and we have a 14.03% from this high to this low. So that is one big evidence there that this may not be the wave count. I mean, it's not out of the question, but I will be saying that maybe this is a 10% chance that this is the wave count. Okay, guys, so always remember that, because if that was the case, then yeah, all right, considering that this is the wave 4, then this is our wave 5 top, and now we are in a massive correction lower. That is the only way that I may see that this is the top of the market. Okay, also considering one thing, why am I saying that this carries a 10%? Because if I go back to the weekly time frame, all right, and we do a measure move to find out where the fifth wave is by taking our extension tools, one of two things, right? We could take the extension from wave 1 to wave 4, okay, and guess what? We've already hit a 100% extension, okay? That's valid. That's valid. But we cannot dissect 5 waves here. It invalidates certain guidelines and rules, okay? Another thing is that we can take an extension from the low of wave 2, project it to wave 3, down to wave 4, and our 100% extension is further up, okay? So we have this zone where wave 5 can potentially complete. So yes, we've already hit one of those targets, and we are rejecting it. Of course, that's valid. There is no subdivision in here that can tell us that this is a clear 5 wave, okay? So with that being said, I favor this as a 10. I give this a 10%, okay? Now, if we go back towards, and sorry, let me backtrack. So the way we were going, we will find out if this is correct, okay, is if we start invalidating certain levels within this structure on our bullish count, okay? So let me show you what that is. We're going to keep these two fib levels here of this higher degree wave structure, and we're going to relabel this to our preferred bullish candle, which still favors further upside. Okay, it's a little different than what we have been interpreting and what is our preferred at the moment. So let's go down to the daily time frame and let's reset the chart. From COVID lows, we're labeling this as wave 1, ABC to the wave 2. Okay, this keeps shifting over. Yes, this is 3 now, and yes, we are in the wave 4. Okay, we're still in the wave 4. Actually, no, sorry, that's not what I'm trying to do. My apologies. We are in a wave 3. Its subdivision is still in the wave 4. So what do I say by, what do I mean by that? There's one key thing that is not overlooked, but it's not invalid. Okay, so let's go back to our other wave count here in the Qs, and let's take a look at what I'm talking about. Okay, so I'm going to take you back up to the daily time frame. All right, and we're looking at this third wave. All right, compared to our this wave count that we're looking at right now. Okay, let me just change this color. Right, this is where we have the third wave completed. Okay, but we're calling this the following. Let me just label this here right now. So 1, 2, 3, 4, and 5 right here. Okay, so 1, 2, 3, 4, and 5. So that means that we're still in the wave 4 correction. Okay, and we're about to hit an invalidation level. So that's the next key topic that I want to review. So here, one thing that we're missing it, because we're not. All right, one thing that's critical is that, remember when I said earlier, wave 1 is equal to wave 3. Here, it's not the case. Okay, in this higher degree, right, we don't have wave 1 being equal, wave 3 equal to wave 1 in length. All right, let's take a look. Even with this measuring tool, we have the high here at 83%, and we have this high here at 56%, way short, right? Even if we take an extension tool, we do not meet the 100% equality of wave 1 and 3. All right, we go down to 618, and yes, we do surpass the 618. Okay, so that's valid. Why is that okay here in this case? And that is okay here in this case because this is, first of all, a conservative wave count. And the reason why is because we have an extended fifth wave. Okay, we have an extended fifth wave. This is, yeah, here we go. So we have 1, 2, 3, 4, and the extended fifth inside the third. That is valid. When we have an extended fifth within the third wave doesn't necessarily have to go towards the 100% extension, because we have extension on the fifth of its smaller degree. Okay, so that's valid. That is not invalid. That is not out of the question. That is not an Elliott Wave rule that we're breaking. So with that being said, this is conservative. We're calling the wave 3 here. So now going back to our alternate count, which is a little bit more bullish, right? From the wave 4 completed here on the super cycle degree, we got the primary degree wave 1. Instead of this being the wave 2, how we have it in our other count, this is the wave 2. So A, B, C pull back into wave 2. 1, 2, 3, down in 4 and 5. Now, if we take an extension, not considering that this would have been an extended fifth, but rather an extended third, okay, we go like this: wave 1 to the 2, down to the 3. Okay, and we're gonna turn this into yellow, and we see here, ladies and gentlemen, that wave 3 will complete, if we're looking for equality, wave 3 will complete at 489 spot 11 in the Qs. Okay, so looking at it from this perspective, the only way that this count will be invalidated is if and when we break this high with the wave 4. So it's really getting close. Okay, and there's an argument to be made, right? So if we go like this, right, this actually, you know, satisfies this guideline, right? The 100% extension of wave 1 and 3. Okay. However, I will not be, since this is the stop of wave 2. So we meet that guideline there. So we are very, very close to invalidating this count. And this is the case, then we have one count left to fall back onto, which is the one that we have been currently operating on there, guys. Okay, so it is important for you guys to be objective on this. Yes, we've almost hit the top. I mean, within the smaller range in the wave 5, correct, and we're now rejecting it, and now we're pulling back, correct, but we're still within trading range, within guidelines, okay, of this whole structure. Nothing has been invalidated. This one will invalidate once, if and when we break this low, or this high rather, and the other count will invalidate if and when we break this high. All right, so these are two zones. So 3 or 4 on the Qs. If wave 4 pulls back further, that will invalidate that count, and then will tell us that, yeah, all right, in fact, everybody else is right. Half of the population following the markets are right, and we've hit the top, meaning the bears. Okay, and now we are heading on lower. That'll be a little crazy. Okay, but obviously not out of the question. All right, guys, so I hope this was a little clear. I hope that this was pretty helpful to you guys. You know, if you have any questions, leave them down in the comment section. We love to interact with you. And yeah, so I hope you guys have a great weekend, and see you guys on Monday. Take care.